All right, I want to welcome everybody to the Rethinking Commercial Underwriting in an Age of Changing Paradigms webcast. Just a few housekeeping items before we get started. On the next slide, if you want to go to the next slide, yeah. So any questions or comments? No one else is going to be able to speak. However, if you have questions or comments, they can be submitted by clicking on the Q&A icon, which is at the bottom of your screen. We will have the presentation and then we'll have a Q&A session at the end. So we will go through and answer the questions at that point. But if you have them throughout, please go ahead and put them in that Q&A box. A YouTube recording along with the presentation will be made available on the IAA website within the next day or so. For these or other past events, please visit the IAA website at www.actuaries.org and click on the drop-down title News and Events, Past Events Library. So I'm Kim Steiner. I lead the North America Life Practice for WTW. I'm also the Vice Chair of the DAVF Forum. Very happy to be moderating today. We have a great speaker, Santiago Lopez, who's going to be leading the session today. He has over 20 years of experience within insurance and technology. He's had a number of roles, including actuarial roles, leading economic capital modeling and Solvency II Pillar 1 implementation at WTW in France. He's also been the CRO at AXA in Colombia and also the CDO there as well. Currently, he's the Director of Data Analytics Consulting in EPAM, which is a large software services provider. His areas of focus range from actuarial and risk-specific projects, such as economic capital modeling, risk management, and internal control, set up to data and technology-oriented projects for insurance companies, such as data strategy rollout, data management, analytics, and AI programs, including use cases on claims, distribution, and underwriting. More recently, he has led the delivery of Gen AI applications focused on underwriting. So at the crossroads of insurance and technology expertise, he delivers data and AI projects focused on business value, leveraging cutting-edge technical developments. So as you can see, his background is really well suited to lead this session today. And at this point, I'll turn it over to you, Santiago, to walk us through the content.
All right, brilliant. Thank you so much, Kim. So super excited to be here. We always need to put this disclaimer screen, of course, in front, right? These are my opinions, not the IAA's. And yes, this, as Kim was saying, this has been a topic that I have been working on for some time. So doing a, let's say, changing underwriting for our clients, developing applications that improve, let's say, that operational part of the flow. And this is truly, we see it accelerating, and does beg the question. And we've had this that I think even our underwriting leads, our chief operating officers or CEOs are asking, and how is it going to change? How is this function going to look like? It's accelerating. We know some of the possibilities. We don't know where it will lead us. I think there's still a lot of uncertainty. I know from my experience that adoption is always complex. There's still a lot of fears. I think a lot of people are thinking, is Gen AI going to come and going to replace the function of the underwriter? So there's really, it's what I would say, it's a hot topic. And hopefully we can give a little bit of an oversight onto what I think through all this thought process, through these implementations, what's going to happen, how this is going to look like in the future. So from a content perspective, we're going to start just by setting the scene about underwriting, what it is today. I think most of you are probably familiar with not really just the process, how it works, but also how it doesn't work as it should. And then we're going to be setting the scene onto what's going to happen in the next few years, probably. And we will close with a couple of demos of how this is already changing today. And by the way, I just as a spoiler, but no one is going to replace the underwriter. And this is very clear, and you'll see how it's going to evolve in the following slides. So just what is happening today, and probably those of you that are familiar, by the way, just like setting the context, this is more about commercial insurance underwriting, including group life, because commercial insurance does happen on both sides of the spectrum. And we know that today we have characterized this as friction points. So there's a bunch of frictions is just little stones that don't let things roll as they should. Right? So these are not things that are meant to be this way and will remain this way forever. These are things that we think that should change. So we know that there's tons of manual processing. So there's a submission that's coming in. You need to inspect it manually. There's a lot of data typing and retyping across systems. There's the question of doing the research around the submission. It's massively time consuming, and the fact that we have more information today hasn't made it easier. It's probably made it more difficult, because we go to this information overload where there's too much, and you need to just know where you should be looking at. Of course, never enough time. So we know some of the clients that we accompany, they speak of leaving 80% of the submissions, so to speak, on the table because they don't have the capacity to go and look at them. And of course, as everyone, there's always this pressure. You need to get more results, right? So what do we say? We're saying, okay, underwriting is going to fundamentally change in this coming years. We're speaking about rewiring, which is about this your typical triad. So yes, it's going to change the process. Certainly, it's going to change the tools. So it's going to change the technology, and the experience is certainly. So the people factor is going to be different, right? And in the end, it should be getting us to the right place in performance. Hopefully, if we do this better. And fundamentally, how do we see the differences? So the first is that we should go from an underwriter that's focusing 80% of their time on operational matters to actually the opposite, where they're looking at more of an oversight, confirmation of edge cases, so really remaining in the driving seat, but just really on an oversight function with a lot of automation happening underneath. A tooling landscape that's going to be different. So the tooling that's built today, that we know today, it's really focused on the operational tasks. And this is, of course, because this hasn't been solved, right? But it should move towards, yes, that performing the operational task will be the basis, but then it will help you also answer the strategical questions about what you're booking and if it's fitting into your portfolio guidelines, into your strategy. And then again, your experience. So the shift will be significant, because if we release ourselves from operations, we will be looking at focusing on validation and strategy layers. So sorry for this pointer jumping across. So how is that going to look like? And to do that, so let's start by how things are looking today. So we prepared a little video for that. Well, with AI, of course, and we're going to see, and this should be familiar to a lot of you.
Meet Sarah, an insurance underwriter tackling one of her most challenging assignments yet, evaluating the risk for a major bank seeking comprehensive coverage. A case like this demands rigorous attention to detail. Sarah must manually sift through volumes of financial statements, asset records, and compliance documents, all to understand the bank's true risk profile. Unlike many personal policies, commercial bank assessments can't rely on automation or shortcuts. Each step requires methodical review, cross-checks, and careful judgments. The complexity of financial institutions means Sarah rarely works alone. She confers with risk analysts, legal advisors, and industry specialists to verify regulatory compliance and address potential vulnerabilities. Manual data entry and the sheer volume of required analysis can be overwhelming. Today, Sarah discovers an inconsistency in the bank's portfolio risk report, a detail that prompts a team huddle to confirm the findings before moving forward. Careful, collaborative effort pays off. After hours of review and teamwork, Sarah finalizes recommendations tailored to the bank's unique needs, striking a balance between protection, compliance, and cost. It's a win that means not just another policy, but real security for a financial institution and peace of mind for thousands of clients. For insurance underwriters, the amount of time manually studying one request is massive. The demand and performance pressure keeps increasing, and it's hard to keep the pace without the right tools, with technology that is not meant to solve her pain. Some time has passed.
All right. So we're back to the PowerPoint in your screens as well, right? Okay, thank you. So this that we saw is a classical picture of what's happening, and it's really these are surveys, right? So this is quantified. There's a bunch, so too many systems, right? So you need to check your exposures in one system. You have the operational data in another system. Ingestion happens somewhere else. Then there's the policy admin systems, and you're just typing, right? It's a bunch of time spent typing and retyping. Of course, the tooling is not there. So Excel still is the main tool in many cases. So little governance around that. A lot of time wasted on basically submissions that are out of appetite. So a lot of wasted focus, and very tools that are still very basic, right? So we really see this quantitatively as well. So now that we've set the scene, let's have a little look at just the vision. So how do we see this changing in the years that are coming? This is a bit of our vision of things to come, and we will be zooming into all of this in a bit. But basically, this is what we have called like the enterprise frontier in underwriting. This is of course not, and this is workbenches. This is properly governed underwriting guidelines. This is good analytics. This is modern pricing, which, by the way, I think I'm doing a bit of publicity for Kim here, because that's a lot of what you guys have in place, right? But this is true. Like this is, guys, stuff that we all know. Like, this is not by no means a technology frontier. All of this has been available for over 10 years. So probably just the analytics is what's evolved more in the recent years, and probably the API integration bits. But all of this exists, right? And it's basically just getting your task management in place, leveraging the latest techniques for pricing, integrating with your policy admin system, with your workbench, just where it should. But from our experience, this is where enterprises are at, and not everyone, by the way, but on an enterprise basis, this is where people are at today. And by the way, we'll deep dive a bit into all of this. Then what we have called Horizon 1, this is mainly point solutions. So we're leveraging AI, Gen AI, to start solving these operational bits along the way. We're going to zoom into this in a bit. This is what we have called the innovation frontier, because this is where we see people experimenting at. A lot of POC work, some in production, but those cases in production are quite discrete. They're usually at individual entity level. So maybe the most sophisticated players have this, at least at the full entity level deployed, and it's usually they're starting, so one assistant, so to speak, one solution. Then we see Horizon 2, which is really the usage of AI happening at enterprise level. So maturity of the tools that we started in Horizon 1, they're managing now a lot more the edge cases. They're brokering, they're starting to broker the communication inside the enterprise. So things like referrals, you can start automating those, or the lot, let's say those that don't deviate from what you were expecting, those that are coming in renewals the same as last year, and you only need to kind of go through this checkbox exercise, tick box exercise. Well, that should happen in a more of an active, on an automated way with agents through MCP servers. And then really an evolution of the tools into active monitoring. We'll see how that's going to happen. And then this Horizon 3, which is this happening on an ecosystem level. Now, Horizon Zero. So once again, this is really, well, this should be table stakes, right? Not everyone's here, but should be table stakes, right? So we're speaking about modern workflow and task management, about embedding your limits into the systems and eventually being able to triage and dispatch in terms of those limits, the cases that come. We're speaking of having proper and clean underwriting guidelines in the last version, and that sounds like it's not technology, but not everyone is there either, and having the right level of operational reporting. Your pricing engines so that you can have controlled model development. So almost modern techniques, technology embedded into your pricing engines. So CI/CD, being able to push the right models, have control of those in production, being able to test them. So all the model management, integration with your core system, with your underwriting workbench, and so on. And then having the modern tools for your book management. So being able to, at point of underwriting, review what's the exposure for what you're getting, being able to see how that integrates into accumulation management when you put it together with the rest of your portfolio, and having the right alerts around that. So that's really about, once again, capabilities that exist, or have existed for a significant time now. Now, this is really should be the minimum today. Now, Horizon 1 starts getting very interesting, and this is where we're seeing the frontier of experimentation, not really of adoption. And this is about having a bunch of point solutions. So we spoke about friction points earlier. So okay, we're gonna start getting the oil on those wheels one by one. So we're gonna start coming in with ingestion capabilities. So probably this is in the table for some or a lot of you, this new data ingestion capabilities in many forms, right? So apart from OCR, which mostly works for retail, having Gen AI being leveraged for data ingestion, we're going to see a bit more of that afterwards. Being able to triage, so when you receive your submissions through email, being able to dispatch it, right? Whether this is small, mid, or complex, and it belongs to my branch, or it's someone else's line of business, right? But just automating this, having research assistance, so that you have already probably a number of sources, alternative sources that you connect to. You also want to, in certain cases, let's say, scan the internet. So being able to have an assistant that's going to look at those and it's going to triage for you, an assistant that's going to look at wordings, so look at your broker wording, and being able to say, okay, this follows all my guidelines, right? There's nothing out of what I should be receiving, right? Having a proper, so from proper management of guidelines, so true knowledge management around underwriting guidelines, having a proper screening of your cases in an automated fashion, having research assistants as well on your internal data. So if you have a client that's coming in with a request, so okay, what's my loss experience on the other lines of business? When was my last in-force policy with this guy? How is this looking on a broker side? Am I profitable with this broker or not? Things that should inform your appetite decisions, but that also should inform your commercial negotiations. And all of this coming into the middle in a different form of seeing the risks. So being able to see alerts quite quickly, being able to see the structure of your submission, what's the coverages that are being requested, what's those locations, what's my schedule of values that's hanging out of this. So really changing and having the right tools at hand of the underwriter, and this, of course, together with a proper portfolio management. And and also setting up the pieces that are going to enable you to be doing this at enterprise level. So slowly, right, setting up like things like responsible AI and model governance. So things that are going to look a lot like they did for Solvency II. So those of you that were familiar and know that there's a lot of model governance here in Europe, right? So this should start looking in a similar fashion to building, approving model changes, approving agent changes. That's going to happen at a central level, and it's going to be together IT and business. So once those foundations are set, what we're going to see is that this is, so the previous one, we're still remaining in the same process. We're just, applying oil where it should, but we're remaining in essentially the same process. But once this, and it will naturally start scaling, we're going to see the process shifting. And this is going to become very interesting, because before, when you were doing, because you had a series, let's say a full chain of things that you needed to go through to get, to say that, yes, this is finally, we can give a quotation for this. So even before pricing, right? So yes, it's inside my appetite, it's complying with my guidelines, right? Or it's not. So we had to go through a full process, the compliance bit, right? Now you should be getting all those assistants that are doing this for you. So this is completely broken. Now you don't need to wait for this sequentially, right? You just need to make sure that your control points are set correctly, right? So you're validating properly your guidelines. You have a check for compliance, which, by the way, should be automated in most cases. You can proceed. So really, the process will start. It's no longer the sequential process. Now you have all the information there, and you need to just decide and make sure that the right boxes have been ticked. And you're going to move from this operations into oversight. So when I get to the office, I have the summary of the submissions that have come in, and I have a summary of those that are, let's say, flagged to continue, those where I need more information, and those where I'm out of appetite. So I'm really going to become almost like an underwriting lead. Everyone will be an underwriting lead with his pool of agents underneath. So we're going to be dedicated to agentic oversight, and of course steering, making sure as well that my agents are properly parameterized and that they're following my strategy. We're going to have a lot of focus on the risk modeling and active accumulation management. So this is going to be a massively interesting area, because what we saw from the last point is where we had assistants that are basically structuring data, so or extracting data from submissions. We have assistants that are doing my risk research, right? My risk assessment. Well, what's going to happen is that we're going to start structuring a lot more data points than we did in the past, and diverse data points. So we're going to be able to first enrich those risk models massively. So where we had, disparate models and we had only 20 data points, now we're going to have a massive set. So basically, we're going to see a bit of that, of a fusioning of, let's say, pricing, the analytical pricing, actuarial pricing, and the rating, the underwriter, flair around, okay, how should we do an uptick or a downtick of that price that I got because of the risk factors? We're going to see this start fusioning, and that's going to be extremely interesting. The underwriter is never going to go away. He's still going to be needed to validate these factors, but we're going to see that being more and more analytical. The research assistants as well, what is going to happen is that you're going to start using them at point of underwriting to gather, okay, what's my, how does my risk look like? But nothing then is going to stop you to start using those actively. So not that you're going to use them continuously in real time, but maybe you'll trigger those assistants once a week or once a month, right? What you're going to get is actually a continuous mapping of risk signals into your portfolio. So this is how we're going to move towards this active risk and active accumulation management, and it's going to become very, very interesting. And of course, focus on strategy and the commercial relationships. And this is where we're going to see a massive amount of time of the underwriter being spent. So on these tasks, which are the operational tasks, are going to be massively diminishing, and we're going to have the time to actually do this research on the risk, and proactively look at my portfolio and spend the time that I should on my commercial relationships. And this Horizon 3, this is more like almost speculative in nature. This is a bit far, so we don't know where it will take us, but quite naturally, what we're gonna very likely be seeing is a brokering of the, let's say, the communications through agents on the, of course, the broker carrier side, and then the reinsurer side as well. we're already seeing the start of this in parts of the portfolio. So here in Europe, we're already starting hearing about the usage of course, your Accord models for specific class of business, and then wrapping those in MCP agents, which or with an MCP server, which what's going to happen is that if you hear this, if you take this from a broker focus, you're going to hear that it's just immensely frustrating the amount of time that they spend exchanging with a carrier on different data formats, missing information, so back and forth that take ages to happen. So these agents are going to start eliminating that friction that's between different actors in the market. So you're going to be able to be sending your data not in a conform, let's say, API payload, but as long as you send it in a proper, let's say, machine readable format, that's going to be able, you're going to have an agent that's going to be receiving that on the carrier side. It's going to be mapping that to their API payloads, and it's going to be telling you this is complete or this is missing some crucial information. It's going to be dispatching that message back. So these processes that were very manual, that took ages in the past, they're going to be almost immediate. And of course, and we already see it happening now, what's going to happen is that the brokers are going to start preferring the carriers that are enabling this capabilities earlier, because they do want this, and it's going to allow you as well to very interesting things like enabling more of delegated underwriting, because you have the tools for the brokers to actually to become GAs and to quickly go and quickly check, right? So this is behind. So they all have parameters, of course, but some cases are a bit edge cases. They're going to be able to automate those checks, and in the end, the objective of the broker is to get a response very quickly to the client. And the carriers that are enabling this are going to make that response much quicker. So this is definitely how the market is going to be positioned. So coming a bit back to this picture that shows us those horizons. What's quite interesting. So there's a couple of lessons, right, that we should take from this. I think the first one is that of course these are not like quantum leaps, right? So actually, as you are or you're starting to, right, or you plan to experiment with this, right? So this is a step that is achievable, right? To get here, there's not a massive, let's say, technology change that's needed, technology paradigm. The technology is there. It's not necessarily mature because this is all 3 years technology, but it is maturing quite quickly, and you can get here like relatively easy. The big hurdle from doing this first step is actually to shift the business behavior, because it does mean that adoption means understanding these tools by the underwriter. It means knowing that they're assistants, they're not going to replace a job, but also understanding the, let's say, the capabilities and the limits, because if you don't understand them, you're gonna push back against them, and also working in a different way with technology. So for this to be successful, with this governance committees and so on around these agents, they're going to happen. So they're going to be working more closely with technology, and there should be relationships of trust that are being built. And this is the main, let's say, change that you need, the main hurdle that you need to go to this step. And then from this one to let's say this horizon 2, which is already massively changing and setting us in a place where the underwriting work is much interesting and it's much nicer. This is, once again, there is not a massive change. If you see if we go back to what we were speaking about, these are natural evolutions of the tools that you've set here in Horizon 1. So you're going to take your data ingestion assistance. What's going to be happening, that you're going to not just structure 20 data points that you need to get into the policy admin system. You're going to be structuring 50 data points just because you can, because it's there, the cost is the same, and it's done with quality. And those are going to be used by the actuaries, and you're going to enrich your data models. Same with your research assistants. So you're going to be using them on point of underwriting, and then you're going to be starting actively using to monitor your portfolio and to get risk signals coming in. So really, this is a natural evolution. And this as well. This is going to be, I tell you, this is going to be approved by the market. There's the carriers that are going to be positioned themselves with MCP servers. They're going to be the ones that are going to start gathering more and more business. Of course, if we don't, so discreetly, they're not quantum steps. They're all visualizables. They're all quite doable. They all lead to great outcomes. What's going to be massively difficult is to actually try to leapfrog. So today we're here, we should be here experimenting with this, right? And this will come naturally in a 2-3 year time frame. But if you go from here and try to jump here, this is going to be massively difficult because you haven't built the right mindset in the underwriters and the right mindset in the compliance functions and the risk functions and the security functions in IT. With that, let me just fall back because we do have a bit of a view of well, how that's going to become.
Some time has passed. Meet Sarah again.
Give me a rundown of the submission queue and how the morning ahead looks.
Of course. We have 7 submissions in our queue. All have been triaged, 3 have been identified with an appetite, and 1 is in pricing optimization.
Sarah has the same expertise, but is now empowered with new tools. Overnight, her agentic workspace has been busy. Every submission that landed after 4 p.m. yesterday has already been parsed and classified. Simple renewals are greenlit, information gaps are surfaced, risk shifts are highlighted, and off-appetite items are ready to decline. She now processes all the submissions that get to her and can focus on the right ones. She accepts the straightforward advice and focuses her time where judgment matters most. A simple visual brief makes the deltas unmistakable and actionable. Her risk enrichment agent searches public data and news, returning a sourced digest. Multiple credible notes flag comparable subsidence issues. Sarah escalates the risk to Jules, the underwriting director. Her AI agents allow her to assess the risk in much more detail for better underwriting confidence. With no material risk changes, the renewals are now processed autonomously by agents. Clean hands, fast decisions. Before lunch, Sarah's queue is clear. Time to shift from processing to partnering. With a single-page brief and guardrails in view, they explore what-if options without the clutter. Jules reviews the escalated submission from Sarah in one pass, and attention turns to a profitability review with the portfolio lead, Olivia. Olivia highlights recent supply chain disruption trends in this manufacturing class. After reviewing exposure concentrations and loss activity, both confirm the portfolio continues to perform within planning tolerances. A wonderful day. Requests cleared, key renewals advanced, portfolio performing to plan. With agentic AI, her judgment scales.
All right. So I hope that was inspiring. Certainly think it's a bit what a lot of people, a lot of the underwriters think of as a great underwriting experience. Now, okay, so how, let's look at how this, what this is looking like and what's those patterns that make this real. So first, I don't want to make this excessively technical, right? I hope that most of you are familiar with Gen AI and agentic AI and so on and so forth. Just from a build perspective, this point of view on how do we get this, like what's the focus and how do we build these tools, right? And I think that a lot of you have heard about agentic, you have seen the platforms, you have seen kind of what's there, and I don't know if you have seen a bit of the adoption in the business. It's quite interesting. What I would say is that we have a bit of, let's say, let's say, split in activities, split in classes. So if we have this side, let's say this side of the equation in terms of, let's say, going from retail to the very, very specialized in commercial, to mid-market and large, on how the data looks like, how the process looks like, and what's those targets. And let's say on the left-hand side of the spectrum, so, we're looking at really high volume, right? So you want like absolutely automated. This is, by the way, what's been achieved for most of the retail lines through traditional technology as well. There's still some things that are, let's say, pending automation where you need manual reviews, etc. But this really, you're looking at going quickly, right? So you're really targeting mass. Of course, you want to maintain a level of quality, but you're really targeting mass business and going quick and accepting quick. Towards the specialty side of the spectrum, where you're really looking at few cases that you need to really drill down deep into. So on the left-hand side of the equation, you're looking at more cost effectiveness. Here, you're looking really at quality on the acceptance, right? You don't want things to escape. You don't want things to be wrongly assessed. So on this left-hand side, the key constraints are around like HR. Okay, so we're looking at getting more or less autonomous underwriting, and so I'm looking at now a workforce that's an agentic workforce, and it's more of a HR constraints that I need to work with during my adoption. Whereas on this side of the spectrum, I'm really looking at change management. So this is fundamental. Basically, the key people will remain there. By the way, this is a bit, the actuarial work is also falling on this side, so it's a bit different, like a different process in insurance, but we're seeing the same. So this is about knowledge workers. You're always looking to keeping your people, to giving career perspectives to your people, and so this is about working with the people that are there already. They will not be replaced. So really, change management is super important. Proper user experience is fundamental. You need to look at things like core business risk management, right? So if I'm going to go towards low touch acceptance, then what's going to happen with my reinsurance? How will my reinsurance, will that be accepted if I don't have an underwriter signing, right? Or how will I automate that process, right? What's my model governance going to look like? How will I accept leakage? How much leakage will I accept, right? And then how that translates into technical patterns. The focus on this side is really on the tools, right? So we have the people still there in the driving seat. We need to give them the right tools to augment. So it's really augmented the human decision maker, human in the loop. It's fundamental. So triaging, you also want to dispatch the cases so that there's some cases that you're going to be able to, let's say, dispatch a decision making to an agent, and that's fine. So those are low risk. So you can do that. It goes back to the leakage, right? How much can I accept? What type of business where can I accept for it to be automated, and which I cannot? And there should be really this validation and so on. And keeping up with, let's say, very good reasoning models. So trying to keep on the curve of your large language models and being able to get onto the latest model, because that's gonna keep you on the edge of being able to do this properly, once again, with quality. On the other side of the spectrum, we're looking at really autonomous decision making, at validating not on a case level, but on a KPI level, so an aggregated level, having, of course, the right guardrails. So you still want to keep the high risk cases dispatched to the humans. And we're actually looking to a shift towards small language models, which is quite interesting, because what we're speaking about here is volume. What we're speaking about here is quick response. So your cost is a big driver. Latencies are a big driver, and you want to take those down. And the way towards it is small language models. Of course, this doesn't happen in a day, because these models take time to, basically, you need to gather the training data so that you can go and hammer a large language model into a small language model. And once again, we were hinting into that. So we're looking at cost, latency, NPS, precision, Whereas here we're looking at precision at the top. Precision doesn't work, nothing works. And then you have the process metrics and things like latency and cost per case at the end, just because this is still massively profitable. And we're looking at building a toolbox here, whereas here we're looking at agentic platforms. So a bit from an architecture perspective, right? What this means is that you need to have a toolbox. So this is the tools that you're going to need to build. The focus on improving the underwriting experience, and you should be looking at these tools hanging. So first, from a tool perspective, decoupled from the business, so you have the business logic underneath, so that you can scale horizontally because you want to build for the enterprise. All sitting in a we call an enterprise Gen AI platform that's going to be enabling you to upgrade, so easily plug in different model versions, even from different providers. So you do want to have that liberty to switch, to compare, and to place yourself on the best cost quality point. This should be giving you, your fundamental, let's say, your FinOps, scalability, access control, all of that, your wrapper. And you need this with an integration gateway on top, basically, because you are going to be already having a bunch of underwriting applications on top that you want to integrate with initially. You don't want to replace this. This is what the underwriters know. And you probably want to use them directly, or you may want an agent, right? Basically AI agents in the middle, so that you can also automate part of this. So these are really the patterns that we're following, that I'm following, say, building these things. And to that, let's just look at a last video. I'm conscious that we need to leave some 15 minutes for a Q&A. So let me just share this. And we'll have a look onto, it's disappeared. So just a second. Yeah. So let's have a look onto what we're building. All right. So we're basically, this is once again, so the tools that we have today that help us extract data, automate that data extraction. This, as I was telling you, they're detached, or you should have patterns where you detach them from the business logic. So you have let's say, Gen AI capability. But just to illustrate, we saw one case where it was credit insurance, and another case where it was group life insurance. So, absolutely I would say on different sides of the spectrum, capabilities or businesses, but being handled by the same tools. A capability that allows you to just extract the data to get your tables in place, so to read your schedules of values, amongst others. Capabilities that allow you to summarize your treaty documents, things like financial statements or financial lines, right? That you need to go through 200 pages, you can get a summary in 2 minutes. Then visual underwriting, where you're getting really a view of your requests upfront, and you get a view of the alerts very quickly, so you can navigate through those. So with that, and I'll finish quite quickly so that then we can jump to Q&A. Well, this is how we're seeing things so today, right? Really today's frontier, where the massive amount of time that we're spending processing one submission, and like as you see, all of the initial, let's say, steps, right? This is today 60% of the time, right, or more, 70%. Right? This is stuff that an underwriter shouldn't be spending his time on. So the information research, right, creating the request, typing in data back and forth, and looking at the email, all of this should be automated, and this is how we see it happening in the future. And really, what we get is a bunch of time to spend on risk assessment, which is where you want to focus your attention, and then having extra time, to really look at strategic activities. So pick up that backlog, right? Pick up all those submissions that were there that we didn't have time to process, already triaged, so we know that we're looking at the right ones, focusing on portfolio management, relationships, strategy. And just a bit of a tempting thought, and hopefully this can also start the discussion on the Q&A. But and you probably lived this on your side, but first, this is a business convince, or how will we be able to convince the business that we have a magnificent opportunity for change, right? And then this is, I don't know, different people view this differently, but I have heard this a couple of times, that the best strategy is just to wait. The technology is so new, you should just wait. You need to wait for it to mature, right? I have a point of view on that, but of course I would like to also hear what you're thinking. So with that, Kim, I don't know, maybe you have a view on this as well, or some of the people in the audience.
Yeah, I mean, I think that the waited out is a common approach. I think that there's a lot of buzz around AI, and not a lot of companies have figured out, well, it's interesting and cool, and analysts are doing neat things with it, how exactly will it benefit the business. So, I think some are kind of willing to let others play around with it and see what the benefits are, and then kind of see. I think there's also just a general fear, every time new technology comes out, I think there's a fear around how can I trust it. And so some of the things you talked about around kind of getting the explanations and the kind of reasoning behind the models that we're building is important. And, I also think that, every time technology comes out, there's a fear that jobs will be replaced. And I think your presentation highlighted, it's not really a replacement, but just a change in the kind of work that needs to be done, and more value added work. And I think we've seen that happen every time new technologies come out. And I believe too that is what will happen with AI. So those are kind of my thoughts on that. I'll just remind everybody, if they have any questions, just submit it in the Q&A log. We do have one in there, but it's at the bottom of your screen. There's a Q&A button. You can go ahead and put any questions in there. So Santiago, there's one that I'll go ahead and ask you. So do you expect that individual companies will develop their own systems, or will a few technology companies build and then others will buy?
So it's a very good question. I think there will be a lot around the volumes that we're speaking about. So it's all about a business case, really, and the capabilities to maintain or let's say, to operate on a technological basis those tools that you're building. So I think for a lot of the smaller companies, it will be just, and this is, in smaller, right? I will even say like tier 2, like local insurers. It will make sense to look at solutions that are on the market, because they can go, they can go with an out of the box type of solutions that's there. Onboarding is quicker. They don't need to maintain it themselves. And then, it does have a much larger running cost. So these are, usually it's SaaS solutions. It's usually on a per case kind of basis, or at least now it is, and especially because we know that there's a token consumption behind each of this. So you're kind of getting a toll per case. So it does cost more per case. But if you have a smaller amount of business, it will make sense to kind of shift to that. I think the larger companies, in particular the multinational groups, they will be driven by the business case to build their own solutions, and their technology areas are larger. They're more mature. They will be able to basically operate those systems, right? They may build them themselves. They may build it with a partner, but they will probably go more for a build, right? That's on the, let's say, on the tool level, so on the higher level. Of course, you have the large language models underneath, which of course, the large language models, we know what the tendencies is like. Those are definitely owned by the companies that have the muscle to build the large data centers that are needed for training. I do think there's going to be a shift towards small language models for many of the specialized tasks, because as we're speaking with the friends, like why do you want a large language model to know about Vivaldi if you're using it for underwriting property, right? So that shift is probably going to happen as well. We're going to see how that looks.
Okay, good. So another question we had, so someone said, I struggle with what part of this is mechanization / automation versus AI, which adds knowledge that didn't exist. Do you have thoughts on that?
Yeah, that's a good question. So look, because of the nature of commercial insurance, the fact is that a lot of the automation work wasn't able to be carried out before large language models, just because of the diversity of the data that's coming in and the complexity of things like risk assessment. So it's a lot of it is automation work supported by generative AI. So not traditional like workflow technology. Workflow technology has a place, of course, because you always have the underwriting workbench on top. There's simple things like, you want to dispatch, you've done your part of the task, and then someone else needs to validate, right? You just dispatch it using workflow technology or task management technology. So that still remains, that's still important. But a lot of this is going to be AI-enabled automation, as opposed to, or Gen AI-enabled automation, as opposed to, let's say, predictive capabilities using AI. I don't know if that answers your question.
It does from my perspective. If there's a follow-up, feel free to submit it. Another question we have in here. So this person said that they agree that a good approach is to wait for the technology to mature. And their question is around whether you feel like it will be a hybrid approach or small steps approach toward building up AI, the use of AI in underwriting.
It will be. And my point of view is that it needs to be, this is why, and I'll link it back to the question of, to the second question that we have on the screen, right? Well, I think you need a small step approach, because there's a lot of change that needs to happen, and that doesn't happen, massively. So you need to start, truly with, when you think about that, well, first you need to start with the low-hanging fruit. So you need to start there where the people hate doing things. So if you ask, the underwriters, do you like to type open the email, you understand it, that's fine, that's great. Then do you like to type in like the 20 data? Do you like to type in by hand the location data, right? Or wait 2 days until the guys at operations come back to you because they take their time typing this in by hand. I don't think anyone's going to say, I love this part of my job, right? So you start with that. Start with the things that people hate, where you're immediately going to make their life better. Start getting them familiar with the technology. They start working this through your governance functions, right? So I know that you need to spend time explaining this to the security guys. You need to spend time explaining this to the compliance guys. Like what's going to happen with the PII or the confidential data that lives in those submissions that's going to get processed in the cloud, blah, blah. So you need to really spend time to explain to them what's going to happen, right? It's not going to use for training, blah, all of this. And it will take, so for relatively simple technology advances, it's going to take just a time to adopt. So that's why you need to start discrete, right? And back to this question, right? Like my vision on this is that because the biggest hurdle for change is the organizational change, you should start now. That's independent of the maturity of the technology. And once you get the people to change, like you're gonna see that you're gonna be at a point, like basically a competitive point that's very different from the others with the technology that you have today. That's why I think that start adopting now. There's a massive gain at the end. Don't wait it out. If you wait it out, you're gonna be seeing people being positioned much better than you. Because they have the people in IT that can build things faster, and they have the business that will accept things faster, that will accept change faster. That's my vision.
Yeah, I think a smaller step approach too helps with some of the barriers around, like, can I trust it? Like if you take a small step, it's easier to trust kind of the small step change and get comfortable with that and then kind of move along. So
absolutely.
So one more question we probably have time for. So how do we build underwriting judgment or actuarial judgment for folks while we mechanize things? Will it be harder to train insightful employees?
Ooh, this is this is the question, right? How do we build this? Like how does the career path change? If I understand this, this is a great question. I've thought about it. I've debated about it with colleagues. Like I think there will be a place. So there's always, it's gonna, let's say the functions are gonna change. Like they've changed already. Programming. So now it's like low code programming, right? But you're gonna need to be familiar. Everyone like in these functions, which are like, of course, actuarial functions is already the case. Like if you don't program, I don't know what you're doing as an actuary. But it's going to happen as well in the underwriting side, and those are going to be probably your junior underwriters. They're very likely going to learn strategy through adjustment and interaction of this Gen AI tools, so to speak. And that's gonna get them to the place where they start knowing the books. They will also be part of, let's say, the commercial phases as a junior is supporting that, preparing or parameterizing and validating the preparation of documents and so forth. So I think that's going to happen on that sense. But it's nevertheless going to be an interesting shift. I don't have all the I don't have a full vision, even not all the answers, but a full vision on how this is gonna happen. It's a great question.
Right. Well, we are at time. I want to thank everyone again for joining today's webcast. And again, if you want to watch this or other prior webcasts, please visit the IA website. Thanks, everyone.
Thank you so much, everyone, for your attention.